Hello and welcome back to Financial Illumination, your one-stop shop for all things personal finance and financial planning here from the team at Lumin Wealth. My name's Jack Dudley, I'm a financial planner here, and I have the absolute pleasure as always to be joined by the financial planning legend. That is Mr. James Corcoran, everybody. How are we doing, James? You well?
I'm very good.
Fantastic.
I don't know if I can live up to that intro, but thank you very much, Jack. Great to be here.
Good stuff. Happy days. Good to see you as always. Today we have got 5 main tips for approaching the end of tax year. It rolls around quicker than it seems to every single year. As soon as we get past Christmas, we're thinking about planning for April's end of tax year and making sure we're utilising everything as best as we possibly can. Tip number 1 from me, it massively annoys me when I look at my bank account and I see direct debits escaping and I'm trying to lasso them all coming back into my account. Wasted direct debits. Go back through your bank statements, look at what your direct debits are looking like, what's going out, do you need it, are you using the gym membership, have you got an extra subscription to all these different things that we've got these days that you're not using. It saves a huge amount of money. Just looking through your bank statements, making sure that you're not letting any money escape on a monthly basis at all. Tip number 2.
Tip number 2, linked to that, if you're checking your direct debits, also check your bank accounts, because so many people sit with money in bank accounts that are paying very little interest. You know, the legend, talk about a legend, the legend in financial planning is Martin Lewis, and Martin is fantastic, the Money Saving Expert website. There's lots of different websites out there to go and check the different bank rates available, but you can get some great deals. Don't just sit with money earning like 0%, 1%. There's some great deals out there you can be looking at. Shift that money around, make sure you're maximising all the best opportunities you can on cash.
Absolutely. And then on to tip number 3, of course, which is the golden egg of financial planning, is the ISA. Now we've got cash ISAs and we've got stocks and shares ISAs primarily that are used obviously within the UK. As of at the moment, we've still got the full allowances to use within this tax year. So that's £20,000. So you can put £20,000 into a cash ISA, £20,000 into a stocks and shares ISA, or a combination of the two, however you see fit. ISA allowances are things that we cannot, of course, roll forward into the new tax year. So they are very much a use it or lose it type account. In line with your point there, James, around banks and interest rates, of course, if you do have money that's kind of sat around that's not really being directed anywhere and there's no intention behind it, utilising higher interest in cash ISAs or utilising stocks and shares ISAs can absolutely help money work that little bit harder. Yeah. So we want to be making sure that we're not leaving any options on the table with regards to ISA allowances. On to tip number 4. Tip
number 4, similar to ISAs, we have pensions.
P word. We love the P word.
We love pensions in our world. So the key thing for pensions is, once again, similar to an ISA allowance, everyone has a pension allowance. But the majority of people don't end up using it. Just if you're working, just to be clear, how much you can pay in. You can pay in up to £60,000 per tax year, but that is also limited to how much you're earning. So how much you're earning, and that doesn't include things like pension income or rental income. That's true earnings.
So not everything counts.
Not everything counts. Interest and things don't don't count. It's what you've actually earned from employment, self-employment. So if you have some money sitting around and you could be you want to get some tax relief, some uplift on that money, the best way to do it is to get it into a pension. You get that tax relief at source. It's going to jump up 20%, 40% potentially, depending on how much you're earning. And it is the most efficient way to generate growth, because how you can put money into an ISA, it's fantastic. It grows tax-free, but it's not going to give you an extra 20% bump or 40% bump for paying it in.
And then finally today we've got tip number 5, which is CGT, capital gains tax. Now over the last few years we have seen quite a drastic reduction in the allowance for capital gains that any one individual can make in a given tax year. It was up around 12,300 I think a couple of years ago. It's come down to 6 and now it's sitting at 3. So only gains of £3,000 can be made tax-free. Of course, going back to the basics, pensions, ISAs, any growth and gains made within those vehicles are tax-free anyway, so they don't apply to capital gains tax whatsoever. But if you've got accounts that are sat in sort of individual shareholdings, or you're on a platform, for example, holding different investments, those potentially could be growing outside of the protection of an ISA and a pension, and they may be subject to capital gains tax. So utilising a capital gains tax allowance throughout any given tax year, so making gains of £3,000 to fit within your allowance, is always a good little tip to make sure that you're not leaving any allowances behind and keeping everything as clean and as tidy as possible.
Selling it down every year, you can just sell bits, transfer it, and it often works with when you're then paying into the ISA. So you'd be selling down, picking which ones to sell to make sure that you're maximising that tax efficiency, get it into the ISA, and over the years you can kind of tend to flush out the gains as much as you can, which is a real benefit of investment versus, say, a property. because you can't sell bits of a property.
No.
You can only sell the whole thing and then get clobbered with a capital gain on that.
This is not a game of Monopoly, unfortunately, in the financial planning world. So there we have it, 5 short and sweet tips going into the end of the tax year. Have a look through those. Make sure you're dusting off the cobwebs in terms of your direct debits, looking at savings on bank interest, looking at ISAs, looking at pensions, and lastly, thinking about any capital gains tax. James, pleasure as always. Thank you for joining me this afternoon. Good to see you. And we'll catch you in the next one.
Thank you very much.